Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for Wednesday, and this is the 27th of May, 2020. We're already into Thursday's trade, though. So you're looking at the evening session. We're about 6:15 p.m., so this is what the market is looking like, and that is Central Time. Gold still under a little pressure. Copper still staying with a good bid. Most of the metals up. Now, obviously, something that the market should be thinking about, doesn't seem overly worried about, is China and Hong Kong. It definitely appears the protesters realize that this is their last stand. China is not apparently going to abide by its word that it would give autonomy to a certain degree, much more than it claims it's doing right now, to Hong Kong as it brought them into the fold. But at the end of the day, Hong Kong is China. And Secretary of State Pompeo recognized that today. It opens the door for the U.S., unfortunately, now to treat Hong Kong as part of China, not with the favored status that it had, and that's going to even add more pressure. What does it do to the banking system and all there? I don't know. It'll get interesting. It doesn't benefit anyone to hurt it, but in 1990s, about 92, 95, right in that range, I believe China was running about 45% of its financial business through Hong Kong. It's 12% today. It doesn't have the same impact that it used to. If you take a look at the bonds and note market, pressure coming down a little bit. We're going to get GDP numbers. We're going to get a lot of information the rest of the week. So the calendar is full. We'll see how this all acts. In looking at the energies, I said to you, and I'll continue to say, I still think the $34.50 area is a high number right now. And while China said, oh, it's talking to the Saudis and their buddy and everything, nonsense. China wants, not China, but Russia wants to break away from this deal in July at some point because they don't want their market share stolen from them. And at $34.50 to countries like Russia, the Saudis, there's money to be made. We're no longer dealing in $10 items. Dollar index stable, foreign currency markets a little bit of everywhere. But the real play today has been, and it's been this way now for the past 48 hours, a rotation out of the FANGs and the tech stocks to a degree, and money flowing into, be it the let's call it the industrial commodities, the retail, the travel, the leisure. People are saying things are going to get more back to normal, and maybe the worst is behind the market. You don't stand in front of a freight train. This market has had not an economic relief, but in stock market relief. This is what you call a V. I didn't think the market was going to be this strong. So go on record. I did say as the market was falling for stock investors, not stock indice people, buy the stocks you like on the way down. Nobody's going to ring the bell when it ends. I said it on Bloomberg. I said it on Fox. And I get calls from the people there, and I did say it. But I'm a futures trader too. And as a futures, this market only just got over that 18-week average of closes, giving me an upside bias in the market. As you can see, it's been a heck of a run. You know what it reminds me of? 2009 and 10. Nobody believed the market would keep going, and that's just what you have right now. The big money boys, the really bright guys, I think they're still much on the sideline here, and they're saying they'll wait the opportunity out and see what the market offers. And I know what they're saying, and so should you. They're saying that as the economy gets rolling, the real hard hits are yet to come. We've seen some bad ones. And yes, people will go back to work, but restaurants aren't going to go back to 100% capacity. You're not going to fill up the airplanes right away. You're not going to get travel going. The hotels won't fill up right away. And as these businesses reopen, how many people, once the government pay program ends, are actually going to be on the unemployment roll? I understand what they're saying. I fully appreciate it. I was in their camp too. But as a trader, well, it's bullish until it isn't bullish anymore. And what you've got here is a market that keeps trying to fight here and make its way to higher highs. You can't argue that. Notice I've taken off the Fibonacci counts. They're not valid. I don't care if the market falls from here. They're not valid. The market should have stopped up in this area, and it didn't. It was able to eat its way, and I think you see that as it came up on several attempts, and I was saying this is pretty stiff resistance. You've now cleared it. If this market wants to run, what's going to stop it? I mean, that's the thing. Its own weight, maybe the Bollinger Band, and the Bollinger Band's right here, and the market's pushing on it to the upside. I certainly never Big word for me. Never recommend buying over or selling under Bollinger Bands. And that's a word I'll live with. Over the years, I learned to teach, and that's what's in my course, and it's here. No, you wait as the market pulls back. Why? Because the odds of beating that algorithm, it's 95% of the time the market's going to stay within the band. So when you're buying outside of it, you're almost saying, well, it's going to pull back in, but maybe it'll pull back in at a higher level where I would have bought. Or you get caught like here, and remember, the leverage in futures is very different than stocks. The leverage here is about 90%, so got to be careful what you do. In terms of momentum, well, you can't count tonight, so don't do that. But as of the close of business Wednesday, both numbers over 80, both over 80 on Tuesday, not so the day before. Tomorrow's all important. If the market's going to fail, if it's going to fail, this is where it's going to do it right now. So I'll stick my neck out and say the odds of trying to embed, it's against the market. You're at the resistance. That does not mean I'm bearish. This is where the market should have the difficult time. If anything, I'm recognizing what the market's done with the exception of the Nasdaq. I want you to take a look at the Nasdaq. This is the Nasdaq on Tuesday. This is the close of business today. You lost the embedded reading. When you lose the embedded reading, the market often goes and makes a challenge of the 18-day average of closes. You missed it by 8 points, but you can see that you're in that zone. I still think it can do that. So it either joins the parade now of the others, but if it hangs here, I think the pros are going to come in and hit this market. Stops over 96.04 to see if they can drop it back to that 92.04 level. We'll see what they do with it. In the Dow, you're overbought as can be. You've cleared a major hurdle, the 100-day average in the upper Bollinger Band. You're still in that resistance zone, but you're trying an upside breakout, and I recognize it. 200-day average is the next resistance, 25,603. In the Russell, same thing as you've got in the others. You're trying to develop the embedded reading. You cannot count today. You got to count Wednesday. Both numbers over 80, both over 80. Not so on Friday. Tomorrow's the key day in this market. So you know I'm geared up for it already. I'm looking to see if these markets going to fail back. If they embed, the odds of being able to take out, first of all, these March lows really starts fading fast. Number two, even this low starts fading. So the bulls have control of the market. I expect that on the first challenge of the lower Bollinger Band that the professionals are going to write puts, with the idea the market will bounce back about $4 to get back to the 18-day average of closes. We'll see if I'm right or wrong. It hasn't happened yet. I said that's what they do here, and those two worked out that way. It's not a trade wreck. It's an observation. That's the cash market. You figure out what to do in the futures. When I look at T-bonds, you're still caught very much in this narrow band. It bends, it tries to turn up a little, then turn down. You're just sort of stuck right in there. The same is even clearer in the 10-year and the 5-year. So these next moves out of here are very important. The dollar index today made its run, and let me show you this. This was yesterday. Oversold in a downtrend. Support 98.87 to 82. The low yesterday was 98.89.5. Today, for good measure, the market goes down, takes out both numbers, and bounces away. That's where I think the pros took money off the table. Now the question is, what's the next trend in the dollar versus other currencies? If it's going to break out, it's in a position to start doing so by dropping from here. So I'll be watching this very carefully. I'm looking for an edge in these markets. In the euro, you went back up to the upper Bollinger Band. Again, you couldn't get through it. Overbought, trend up. So we can see the euro's trying to move out to the upside, the dollar to the downside at this point. The yen has gone nowhere. They keep throwing money at the Japanese economy, but you're caught in what I call this pipe and not moving one way or the other. Bitcoin. Bitcoin's still in a downtrend. The market made a run today. If we take a look at today's action, you got as high as 93.35. 93.61 is the 18-day average of closes, so you're in that resistance zone. If you get up and over these numbers here, all you'll do is negate the bit of a downtrend draft that has happened. Momentum's already flattening out. I don't see anything of super interest. If the market drops, I'm looking for the 8,600 to 8,505 area to be support. And as I said, I don't see anything on the chart right now to throw out any buy signals. In the Brent versus WTI crude, it's still at the $1.97 level. So all that premium, $5, has collapsed in the marketplace. Prices have gotten very close. Now I'm concerned. Why? You had an embedded reading going home today. You're losing it right now in a big manner. The odds favor price and the 18-day average are probably going to make a run at each other. That's what the odds favor. You start losing these numbers in a big way. Both numbers, I think the pros are saying maybe it's time to take some money off the table. It's happening also not as great a degree because one of the numbers is still in the 80s in the August crude, but falling. And by the way, that's August. I got to go back to the July, but that's what it is. You know why that changed? Because the Junes go away and then automatically the chart services jump them. I'll fix all that for tomorrow. We are on July gasoline. You know what I'm going to tell you. You're losing the embedded reading. Be very careful. This can make this market get back to that 96.44 level very quickly, the 18-day average. And in nat gas, we'll see what tomorrow brings. What about this laying down? Well, we can't count Thursday because we don't know where it's going to finish. But both numbers were under 20 today, Wednesday. Both under 20 on Tuesday, and on Friday, both were under 20. So what do we have? We have a bearish embedded reading. When the red line gets over 20, that'll be a sign that the market's ready to get up and challenge the 18-day average of closes or make a run at it. And right now, the bears are in control. And until that number on the red gets over the 20 level, I think the pros just are going to keep selling this market at this point in time. We write about a lot of this throughout the day. We have oral commentaries. I don't know if you're aware of any of this, but we look at like our websites as catalogs of what we offer. And we view our charting software programs as where all the meat of what we do takes place. So in our charting software, you can view my videos, my webinars. A lot of things are available. The daily numbers right in the charting software. The research that we write right in there. That's where I think it belongs. I don't think you have to go to 50 different places to find different things. If you'd like to give this a try, we'd love to show it to you. Even our handheld app devices for both your Android and your Mac. Just go to our website. Look at our free offer, sign up. We'll take care of it from there. You can click up there to get there as well. I'm Ira Epstein. You have a great day. I will see you all tomorrow.